Hey everybody, welcome back. If your credit score is below 740, this video is for you. So let's get started. We got Emma joining us today.
Hello, happy to be here.
Welcome, happy that you could join. We're gonna quiz you. We're gonna talk about credit scores, credit score factors, and all things that touch your wallet, which I'm
Sounds good.
sure excites everyone watching because today's financial environment is pretty wild.
It is.
It's kind of confusing as well. Like, are we headed for a recession? Are we not? What's going on with student loan debt? What about the massive credit card debt hitting a record over 1 trillion today?
Seriously.
Yeah. So, but credit scores are at the heart, really, of all of this. So, I want to, before we dive in and talk about all these things, let me just ask you for your story around credit scores. Like, when did you first hear that word, credit scores?
Probably sometime in high school, but I didn't seem to care at that age. So the first time that I really understood what a credit score was probably early college.
Okay. How would you define a credit score today?
Well, it can help you get loans. It impacts credit cards, which ones you can get,
Okay.
and your mortgage, if you have one, which I don't.
Okay. Okay. So, credit score is a 3-digit number that's assigned to every person.
Gotcha.
And if we know that is like the initial definition, then we also know that what you said, it impacts all of those different types of loans, different opportunities that we have. Now, if you didn't learn about credit scores in high school, when did you actually learn about it? Because I'm sure a lot of viewers didn't learn it in high school or college either.
Yeah, it was when I went to buy a car.
Okay.
Yeah.
So you're pretty much forced to learn about it because you're making a financial decision.
Yes,
Okay. So did you get the loan?
I did.
You did get a loan. So you didn't know anything about credit scores, and yet your score was good enough to get a loan. How in the
Yes.
world did that happen?
I had been paying student loans. So
Okay, there we go.
that was one thing. I was paying them early. I took it out, I think senior year of college, like when I was applying for schools and had gotten in, chose my school, and just started paying them kind of earlier
Okay.
to try to pay them off because I had some money saved up.
Since you brought up student loans, I'm sure a lot of our viewers have student loan debt.
Yeah.
Did you know what kind of rates that you had on your student loans when you were getting it?
No.
Like you just kind of did it.
Yeah.
It was easy. Like how long did it take you to get that loan? Was it like hours, days?
Maybe days.
Did you need your parents to sign off?
I did. Yeah. My
Okay.
mom helped with it. So
Okay.
it
Okay.
wasn't all me.
All right. So you got the student loan, you're making on-time payments, and you go to get a car and you're approved.
Yeah.
Do you know what your credit score is today?
I'm not sure of the exact number. I haven't checked in a while, but somewhere between 750, 800. It's
Okay.
in the sevens.
That's actually really good.
Thank you.
Anything above 740 is stellar. Like that number
How
opens
come?
all the doors. A lot of the loan a lot of the loan originators, credit card companies, they will obviously look at that 3-digit number. And 740 universally is considered like that moment that you've reached it, like you've arrived.
Okay.
And you can most likely get a mortgage, an auto loan. You can get the best credit cards. As a matter of fact, there's some really stellar deals if you have a decent credit score. For example, I was shopping credit cards the other day, 0 APR for 16 months on a credit card.
That's good.
Now, just imagine if you have credit card debt and today's average credit card APR is over 29% average. Now, imagine if you can just transfer that balance to a 0 APR card for 16 months and just focus on paying down your debt rather than paying a bunch of interest.
That would be great.
Yeah, that's actually really useful thing to do. I have a couple of friends who are doing that today, and they are loving it. You did not have high school or college for financial education.
No.
Where did you get your financial education from?
Mainly from my parents. I
Okay.
started asking questions once, I started caring about my finances a little more, and they were great resources. But yeah, I didn't really learn much about it in school.
Okay. So you had parents, a lot of people don't have that, that resource, a mom or a dad that can sit down and teach them. So that's really cool. Good for you. But for those who did miss out, or maybe you are in high school and you're like, dang, why aren't they teaching me about credit scores? We're going to actually probably pivot that direction here in a moment. But I have one last question for you. what is your source of financial education outside of your parents today? Like what platform? Is there a podcast, like maybe Dave Ramsey or someone in that space?
I have listened to Dave Ramsey. I also just kind of look at general news.
Okay.
I'm kind of lazy. If
Do you
it
have
hasn't-
one that you would name that you
Apple
do
News,
like?
because it's
Okay.
just easy to scroll.
Right on. All right.
Yeah.
All right. So actually, quick question to the viewers. You want to comment your favorite financial source? Like, is there an amazing podcast, amazing book, anything that you'd recommend to the viewers? We'd love to hear it, and we can just put it all together as a resource for everyone who's going to watch this video.
Yeah,
Sweet deal.
sounds good.
All right, so we're going to go ahead and pivot, and this is probably what our viewers have been waiting for. This is what we've been preparing for. We want to talk about the 5 credit score factors, and we want to provide little nuggets of truth that could help reshape and just change that credit score for those who are either trying to establish it or those who've just ruined it, made some bad mistakes, and they're ready to change. They're ready for massive change. So do you know the 5 credit score factors, the major ones?
Oh, I'm not sure.
All right,
Maybe.
let's go. Let's hear it. This
Okay.
is test time.
Credit age.
Credit age. 1.
Lines of credit? Or like credit mix?
Credit mix. Types of credit or credit mix. Yep.
Okay, gotcha.
You mentioned one of them already.
Uh-oh.
On time.
Oh, on-time payments. Yeah, I knew
the
that
most
one.
important one
I
of
knew that
all.
one. Let's see.
Okay.
Uh-oh.
Yeah. How about we do this? Emma failed the test. Wah, wah, wah. Could you name all 5? So to all the viewers, just think about it. 1, 2, 3, 4, 5. If you can't, again, make sure you stick around. Let's go ahead and do a little mini crash course on credit scores, factors.
Clearly, I need it.
And we're going to see how we can help people improve them.
Cool.
So just for the sake of, I guess, social verification, I want to share my credit score. So I'm going to open up, and I'm going to open up in the True Finance app. So I've opened the app here, and you'll see my credit score. Today it's 795. I thought it was 805 before this recording, but I guess it dropped, and I actually remember why. Financed my first car ever.
Awesome.
And explain why that made a 10% dip. But what you would see when you'd open up the True Finance app, specifically in the credit score section, is the credit score factors. And you're going to see a green smiley face if you're doing great, red frowning face if you're not doing great, like bad, or you're going to see a yellow kind of confused face, means you're doing all right. The reason why that's so important is because whatever you're doing great in green, keep doing that. That's a good habit you have. Whatever's in red, that's what's really hurting you today. So mine, for example, today, credit H is in red, and I'll explain exactly why. So let's start from the top, work our way down. So the very first one is actually payment history. This is like the number one thing that people normally mention when they're going down the list. You mentioned it as the third one. Not throwing any shade at you. But this makes up 35% of your credit score.
Dang. That's a lot.
If you do this right, most likely your credit score is going to be okay. A missed payment could impact your score between 5 and 7 years. That's how long it can follow you. And that missed payment is massively important when we take into consideration or trying to place ourselves in the position of a creditor. And I love doing this. So I lead these credit score classes once a month, and just love talking about credit scores with people who are trying to improve them. And I use this scenario. So bear with me for a moment. Imagine for a moment if you have a friend that comes to you to borrow money. It's not like a super good friend. It's more like an acquaintance. Let's call him Bill, since we're talking about money. So Bill comes to you and says, hey, can I borrow $1,000? And your response would be, do you just give him the money? Or do you do...
Are you going to pay me back?
Exactly. You want to get your money back. So that's what the creditor is doing as well. They'll give you money. They want to pay you back. And that 3-digit number, your credit score, is essentially what allows them to know how likely you are to pay back. So in this example with Bill, I would probably find a mutual acquaintance and be like, hey, has Bill ever borrowed money from you? Now imagine if the answer was yes, and that guy still owes me $1,000.
Wouldn't be paying Bill.
You wouldn't give a cent to Bill
No.
because you're probably going to be in line to get that money back. Or if the scenario was, oh yeah, Bill, I love Bill. He borrowed $1,000. We got a 12-month term, and he was paying me back on time every single month. He's paid it off. Wonderful. Your reaction then would be, wow, that's stellar. Let's lend Bill some money.
Yeah.
So the creditor wants to do the exact same thing. And on-time payments is like that main idea. Like you need to, if you are committing to a car payment or a mortgage or a credit card, the creditor wants to be able to see that you are going to hold your end of the bargain, that you're going to hold your word, and you're going to make your payments on time. If you can't make your payment on time, most likely there's a financial strain or you're a irresponsible borrower. So the easiest tip here is to go and set everything on auto pay, whether it's your utilities, your credit cards at the minimum payment, your auto, your mortgage loan, anything, your student loans. Just set everything at least at the minimum payment to be on auto pay.
Smart.
Now, let me ask you this question. Have you ever dealt with credit card fraud?
I actually have not.
Okay, here's why I bring this up. I actually had some fraud on my account about 6 months ago. So I had to close my credit card, and that was such a headache because I had to go and switch auto pay on everything, and it took me about 3 hours. And I had to remember, did I miss any accounts? Is everything there? So if it took me 3 hours, most likely all of our viewers, including yourself, who's joining me on this talk, could update everything on auto pay within 3 hours.
Yeah.
Now you can sit back, relax, and make sure and have that peace of mind. I won't have any missed payments. And as I showed in my account, today I have 100% history when it comes to repayments in the last, well, however far back that tracks. This has been massively important. As a matter of fact, when it comes to credit scores, I also didn't learn anything about it in high school or college. I just kind of went the assumption, make your payments on time. And that's really it. The last nugget of truth that I'd share, actually, before moving on to the second one is, when it comes to late payments, if you're just a little bit late, a few days, most likely if you call and you're nice and sweet about it to the credit card issuer or whoever else you're late with, just ask, hey, I'm sorry, it was my mistake. Can you please fix? Can you please remove it? Can you remove the fee and the inquiry? They will most likely say yes.
Smart.
I've been in 2 situations like that, and both of them were a positive outcome.
Good to know.
Wonderful. The second thing that we have is actually your credit card use, or also known as credit utilization. Now, this one is often overlooked and very rarely discussed, but it makes up 30% of your credit score.
Dang.
So 30%. Most likely, for the majority of Americans, this is weighing down their score, in some cases more than late payments. Let me explain. So the easiest way to explain credit utilization is this. You have a credit card that has a limit of $10,000, and you need to, at your statement balance date, not have a utilization of more than 30%.
Gotcha.
So that's the magic number, 30%. If your credit card at this, again, you can use all $10,000 throughout the month, but when it comes to your statement balance date, you need to pay it down below 30%,
So $3,000.
$3,000, and most likely you will have a good score. If you want to have an excellent score above 800, you want to keep that below 10% utilization rate.
Got it. Good to know.
Mine today is at utilization at 5%. Try to keep it there, even though I use about 30% of my limits. It's usually down at 5 at the day that they're reporting it, which is the statement balance date. Now, when it comes to the credit utilization rate, one of the big problems or one of the big questions that I get is actually, well, what if I don't have any money to pay down my card? Like, it's not maxed out, but I can't get below 30%. The easiest way, again, it's not going to work for everybody, but it does work for many, is to actually call your credit card company and say, hey, can you increase my limit? So
Smart.
if you're using, say, 50% and on a limit that's got $10,000, and you call in your bank, let's say it's Citi or Wells Fargo, they go, sure, we'll increase it to $15,000. Now, without paying it down, you're below that threshold of 30% without making a single payment.
It's a good idea.
So easy little tip and trick about credit utilization. But again, these 2 credit score factors, if you are like, I got to dip out, I got to leave this video, I can't keep watching because they're talking too long or whatever, just remember these 2 things. The on-time payments, credit utilization, together they make up 65% of your credit score. And if you do these two things right, most likely your score will be about above 740. And in some cases, one of the biggest issues when it comes to addressing these two factors is a lack of income, which is hurting American families all over today. And again, we mentioned credit card debt is over $1 trillion in America today.
So crazy.
One
It's a huge number.
trillion. The average American family has over 4 credit cards. Average American has over $8,000 in credit card debt.
Crazy.
Like you take that into consideration, now you're talking about how do I get below my utilization? How do I make all my payments on time? I'm barely getting by, which is a very scary place to be. So there's really only two things you can do. You're talking about either increasing the amount of money coming in or decreasing what you're spending. Now you can do both. When you're dealing with these two factors, you can say, all right, I'm going to get I'm going to DoorDash once a week for the next 6 months, and I'm committed to using those funds to pay down my credit card debt. In fact, I'm going to transfer all my debt over to the 0 APR credit card so that I'm just paying down the actual amount rather than APR or whatever else you're going to do. But you're just committed to making more money. And if you at least do that, wonderful. Or if you stop wasting so much. So you're saying, I'm going to, cancel my Netflix. I'm not going to drive so much. I'm going to try to budget a little bit better and coupon. Again, now you're spending less. Those two levers will make the biggest impact, obviously, on the amount of funds coming in and out, which will then impact your ability to be strategic in paying on time and paying more on time. So you're actually paying off your debt and getting that utilization lower. That was a mouthful. Are you still good?
Info.
You
Yeah,
still good?
I'm still here.
Cool. Hopefully everybody's still good too. We're going to continue on. These next three credit score factors, they're going to make up the other 45% of the credit score.
Okay.
Now they're
So a
still
little less.
Yeah, they're still obviously important. They are a little bit less. The first one that we're going to dive into is actually credit age.
Okay.
What-
That was one I got.
Yes, you did. What do you think of when you think credit age?
How long you've been building credit, right?
Absolutely. So we go back to our scenario with Bill, who's trying to borrow money from you, that $1,000. If you talk to Bill and he says, can I borrow $1,000? But you find out just before he asked you for money, he's actually borrowed $5,000 from John and another $3,000 from Kathy, and all in the span of a month, that would raise a flag, a red flag.
Sure. Yeah.
'Cause now you're thinking, okay, can Bill make all these payments on time
At once.
at once?
Yeah.
It's a huge commitment. So what the banks want to see, what the credit card companies want to see is that once you acquire a new type of debt, that you can handle that payment on time for a set amount of time before approving you again for something else.
Makes sense.
Yeah. So it's not to say you're going to be, that you're not going to get a loan, but it's going to show up in your credit score and it will ding it. The example that comes to my mind is actually 2 years ago, we bought an Airbnb. It was our first investment like that. My credit score before the mortgage was like an 802. And I remember looking at my app, my credit score in the app, and it falls to like a 720.
Dang. That's a lot.
That was a massive drop. And my
Yeah.
jaw kind of dropped. And I was like, what is there fraud? Like, what's going on? Did I miss a gazillion payments? What's going on? But it turned out it was actually a new age of my mortgage. And
Okay.
it was a big limit, right? You're talking about a mortgage of a home, an investment property. So my score went massively down. But I noticed then within 3 months, it went right back to where it was before.
Okay. What's the 3 months for?
I'm sure there are different metrics for different bureaus, but within the 3 months specifically for my account on Equifax, it jumped right back up. So it seems like that 3-month threshold, okay, this person has acquired this new type of loan, which has this X amount of dollars they owe every month. They've made it that payment on time for 3 months in a row. Wonderful. He can handle it. She can handle it. So the credit score goes right back up to where it was.
Makes sense.
And again, that was kind of confusing, a little scary, but it makes total sense. Again, back to the scenario with Bill. You just can't go and get all this debt and then expect every creditor to approve you for more and more and more, because that is the red flag.
Yeah.
So credit age is massively important. So don't be afraid. If you buy a new car, your credit score dips a little bit, it will jump right back up again within a few months if you make your payments on time. All right, the fourth credit score factor is another one that you mentioned, credit mix or total accounts. So this one is massively important because what you're talking about here is the mix or the different diverse types of credit that you have. An example actually comes to mind. I was coaching this family of new immigrants from Ukraine. And it was fascinating because while coaching them, their credit score increased. Again, no established credit before. Within a year and 3 months, the credit score was over 760. It was like 763.
Dang.
Which is pretty impressive. And so the family got really excited. They're like, oh, our credit score is good. We can go buy a house. And that's what you would think if you have a decent credit score. So they go sit down with the loan officer and they were denied. And the reason for being denied was actually, hey, you don't have a credit mix.
Okay. So they just had one thing?
All they had was a secured credit builder card. That is how they got their credit score to where it was. But it was like a $1,000 limit on this credit builder card. And the lender is looking at it, the loan officer, and he says, like, this does not, build so much trust. It's a $1,000 limit. There's nothing here really. We can't help you. So what you need to do is diversify your types of credit, specifically higher amounts. Try to get, up to $10,000 in your cards, at least 5. With credit cards, maybe get a personal loan, get an auto loan, but you need different types of credit and show that you can handle a diverse portfolio of lines of credit. So now they're working on doing exactly that. This is actually a pretty good time to actually talk about how to make that happen. So one of the ways, it's actually really useful in establishing your credit score or rebuilding it or diversifying it, if you can't get approved for your own card, is being added to another person's card.
I didn't know that.
Yeah, so a lot of parents do this for their children, establish it before they're even 18. So I have 4 daughters. I can actually add my kids to my credit card, and I can keep their credit cards or ask them not to send me a credit card, but they'll be on my file. So any limits that I have are their limits. Any on-time payments I make are theirs. Any missed payments are their missed payments. So this brings me back to actually the recession, 2009. My dad and I were actually in the construction field. Obviously, there's no work in that line of business during that time, or very little of it. And he couldn't make payments, and he had rental properties. And those residents were also not making payments. So he lost those homes. His credit score went down to the 400s.
Dang.
That's
sad.
Yeah, he couldn't even get a $500 credit card anywhere. And so actually the secret number is 640. Once you get to 640, you can probably get a card. Before that, it's really difficult. You can only get a secured credit builder card. But if you want the easiest entry into an actual credit card, non-secured, is going to be Capital One.
Gotcha.
For those who are listening.
I've heard that.
Yes. Capital One is one of the easiest places to get a credit card. It's got the lowest entry barrier. But wanted to help my dad restore his credit. So I actually added him to my credit profile. Didn't give him a card, but I was just doing life as usual. And his credit score improved. It took about 9 to 12 months, but it improved over the 600s again.
Awesome.
And obviously it's good today. So what you want to do, again, is you want to be able to diversify. In some cases, that's go get a $1,000 loan. Put that money aside into a savings account. Make those payments on time. And now you're establishing a different type of credit.
That's smart if you're trying to diversify.
Yeah.
It's a good idea.
Yeah. So what would be your next diversification? Like, what would be your next big purchase if you would
I mean, I guess I've never gotten a personal loan. So maybe that.
Could be. How about a mortgage?
I've never gotten a mortgage.
Are you ready?
Probably not.
No. Okay. Okay. But how do you know if you'd be approved or not today?
I guess I don't.
Since we just had a conversation about this, like this family thought that they're totally going into a scenario where they're going to be approved and they're going to get this home. They already found the home they want to buy. They walked through. They loved it.
Sad.
Super sad. Yeah. Now it's another delay. It's probably going to take them about 9 to 12 months just to be able to get approved for that mortgage loan. So what if you actually sat down with the loan officer today and said, hey, could I get approved for a loan today?
It's probably a good idea.
Yeah. You get a head start.
Yeah. I know a couple. I should just do it.
Yeah. Yeah. I mean, at the end of the day, it doesn't hurt. and you'll know where you stand in this position. So, and you're not hurting your credit score with a hard inquiry either, because you're just showing the facts, and they'll be able to give you information without pulling your credit.
Oh, very cool.
Yeah.
Good to know.
Okay. And the very last one that we have, number 5, is hard inquiries. So this rounds out our 100% with another 10%. Hard inquiries is anytime you're applying for a type of loan where they're checking your score. They're really going to do some digging. There's soft pull, there's a hard pull. If you're applying for auto loan, that's going to be a hard pull. Yeah. Mortgage, hard pull. And not all credit cards are hard pulls. Some are. It really depends. Personal loans, same. You can get away with some doing soft, others hard pulls.
Gotcha.
But one mistake that a lot of people make, actually, they don't schedule their hard pulls out. Let me explain. Some people, what they'll do is they'll apply for a credit card every single month, or some kind of personal loan every single month. Obviously, out of need, like they really need it to happen. They really need to acquire, the extra funds because they're, desperate for whatever reason. But what ends up happening then is you're just beating up your credit score every single month. So it has to stop people and be like, stop applying for things all the time. Pick a month. Maybe it's going to be January. In January, I'm going to apply for 3 credit cards all at once and my personal loan. And that way you give your credit score like a breather, some break. Then this kind of goes in again with that new types of credit that we discussed, which is 15% of your score. You're just kind of like, you're slowing down. If you're doing it all at once, again, getting a bunch of different types of credit, and you're continually getting hard pulls all the time, your credit score just doesn't have a chance to recover from it.
That makes sense.
So maybe twice a year, organize your applications to twice a year. I'm going to apply for things, but I'm going to try to withhold doing it very often, once, twice, 3 times a month.
That totally makes sense.
Yeah.
I'm going to keep that in mind.
Okay. So quick recap then, if our viewers are interested, the summary is like this. Make all your payments on time. Like set everything on an auto pay, anything that you can think of, write it all down and get to it. It won't take you more than 3 hours. And the next one is just keep your utilization rate below 30% on your credit cards. That shows that you're not just barely scraping, getting by, and you're proving to other loan originators and credit card companies that you can actually not only make your payments on time, but you don't need that full max amount, meaning you are not fully dependent on living on that credit card for everyday life. The third one is don't worry if your credit score drops after you get a new type of credit. That's expected. Breathe, relax. Do life as business, just make all your payments on time. And of course, you want to diversify your types of credit. So if you have a credit card today, find other ways that you can diversify. And last but not least, hard inquiries. Just be careful, be intentional. Only do it if you really need to. All right, now as we're winding down our talk about credit scores, do you have any questions for me?
I do. I know that you mentioned that you teach credit score courses. I think that would have been like really beneficial for me back in the day.
Yeah.
Where can people find those?
Yeah, so we actually have a monthly Zoom calls with anyone that can join, anybody that wants to join. So that I think the easiest way to do that today is on ThinkSave Retire's LinkedIn page.
Okay.
We will have an invite. We'll post it monthly, and it's open, like Q&A style. Anyone can ask any question as well.
Nice.
But I have good news. We're actually currently building out a credit score course that's going to have a massive amount of resources. I'm talking about even like sample letters that you can send to credit bureaus to dispute late payments, hard inquiries,
Smart.
etc.
That's so nice.
So I mean, we just want to help people. We know people are really struggling. That credit is so wild. That credit score, that 3-digit number, stands in the way of a lot of people just living their best life.
Yeah.
And, sometimes it's one mistake. I just made one bad mistake. I missed a payment. Or you acquired really, really bad terms on a student loan that you just can't afford. And you get that occurring interest rates and you're just wondering why.
Yeah.
And you feel like the school system and the whole system is really failing you. But anyhow, kind of went down that whole rabbit hole. We'll talk about student loans a different day. So anyways, we're launching that course here pretty soon. Weekly Zoom calls are available. And I just wanted to give another shout out to True Finance. This app is super easy. You could check your credit score for free, get free identity protection, and you can also obtain a cash advance at
Nice.
0% APR between $25 and $100. So those who are just trying to get by, this is a super awesome app for them to be able to download and enjoy. Cool. Well,
Cool.
thank you again.
Thank you.
And thank you everybody for who joined us today. If you have any questions about credit scores, drop them in the comments below and we will respond to you. We are here to help you take your financial journey to the next level. Take care, y'all.